Did you know that the average investor started investing after the age of 33? And that 15% of new investors started investing in 2020? Well, if you're new to investing or you're still waiting on the sideline and you want to start building wealth, we're going to show you today how you can build wealth investing as a beginner. Hello, this is the Wealth Twins Show, and this is episode number 7. I'm Nadia.
And I'm Nicole, and we are actual twins, guys. We've been getting a lot of comments. So, we are actual twins, and today we want to talk to you about how to build wealth as a beginner. But, Nadia, I think before we start, maybe we should give a little background to some people because this is episode number 7, but I'm not sure if everyone knows a little bit about
Yeah,
us.
why
I
not?
thought we should start off like that. What do you
I
think?
think that's a good idea. Go ahead.
Okay, so in case you don't know, outside of being twins, Nana and I also are ex Wall Street professionals. We used to work at Goldman Sachs and other firms. On top of that, I have my MBA from NYU in financial instruments, which Nadia likes to call the MBA in the stock market, right? We both passed our trading license exams. If you know what you know, it will be the Series 7 and 63. So we both passed those exams, but we cannot say that they're valid now because we have left Wall Street.
Yep.
So that's what I think is the reason why we can be able to help you in your journey in terms of building wealth. And also, on top of that, I should say, Nadia, I don't want to give away our ages, but we have been investing for over 20 years, if that gives you a little bit of a hint.
Yeah.
Okay. So, with that, Nadia, I think we should start off and teach beginners, especially beginners, how to build wealth investing as a beginner. And what would be the first thing you would say you would start with?
I think the first thing I would start with is that people need to understand if your main goal is to build wealth through investing, you need to start off with a decent amount of money, or you need to start investing over time a decent amount of money. Now, why do I say that? It's easy as a new investor to be scared about losing your money when it comes to investing. But the problem is, when you're new to investing, it's very easy for you to be scared of losing your money. But the thing is, they have a lot of new tools now where you can start investing with as little as $1 or $5. But if you really want to build wealth and that's your end goal, you have to start dedicating more money to the process so that money can grow for you and compound over time. If you're putting in small amounts of money, you can't expect it to grow to a point where you consider that it is a wealth generator for you if you're not dedicating your resources and saving and investing money on a regular basis. So, my thing is, if you're looking to build wealth as a beginner, be dedicated to the process and make sure you save and allocate money to the process of investing so that money can grow for you and work for you and make money on itself. What do you think, Nicole?
Okay, I would say I agree with that, but I don't 100% agree. So there's two
Okay.
ways you can really build wealth in investing, right? You kind of mentioned it. One, you either have to have time in the market, right? Which you can, if you have the time, you can grow a small amount of money into a large amount of money because
Well,
of compounding.
well, let me
Now,
let me clarify. When I say a small amount of money, I say you can't do it with $1 and $5 investments. You have to up
it
those
can't be a
investments.
haphazard thing. You have to be
It has
consistent
to be
with it.
consistent. It has to be, I say, at least $100 or more in order for it to actually start working for you.
Okay, so with that, yes. So with time, even a small amount of money, as long as it's on a consistent basis, can grow, right? And especially if you're investing in the right things. But two, if you don't have the time, especially if you over the age of 30, then the way to make up that time is to put more money to work for you. Okay. So if the older you get, typically the more money you can make. So if you're younger, you don't typically have that much money in your at your disposal to invest and dedicate to investing. But hopefully, if you have your expenses in check and your income has grown as you get older, you can dedicate a larger portion of your income towards investing if your goal is to build wealth. So I do agree with that. So you can do two ways. You can either have the time or you can have the money. And what's best is if you have the time and the money. But if we have to choose one or the other, if you're getting your age and you're over like 30 or so, then you need to dedicate more money if your goal is to build wealth in the stock market. Okay. Now, I think one of the things that Nadia is saying is really is going to be what my first point is part of my first point, which is there are three things you really have to consider when you start investing, right? And especially if your goal is to build wealth. Those three things are your true risk tolerance, your goals, and your timeline. And I think we basically hit on the timeline, right? The longer you have to invest, the better. Okay. And that affects how much money you put in or how much you want to get out at the end. Okay.
Now,
Now,
before you jump into it, I think we need to clarify what risk tolerance is. And I agree with you. And I think risk tolerance holds a lot of people back, but give a definition of what risk tolerance is.
so the risk tolerance is how much risk you're willing to take to get a return on your money. So the higher return you can get on an investment, let's say a stock company, right? If you have a company that's like a penny stock, there's a lot of risk involved in a penny stock. You don't know anything really about the company. It's a very new company, and it might not be that easy to get rid of the stock if you buy a penny stock,
Hmm.
right? But on the flip side of that, if that penny stock really does well, that dollar you put into that stock can grow into $1,000. Okay, so you're taking that risk on something that's not a sure bet, but in return for that sure bet, you have a chance of making a very huge reward for it.
Now
Okay,
let's
now I,
let's explain it. Well, when I think about risk and I think about risk tolerance, when someone's new to investing, you got to have it in two different ways, right? You're going to have someone who wants to take a lot of risk and try to make a lot of money in the short term, and then you have a person who doesn't take enough risk and doesn't utilize their money to the point where it actually can do more benefit for you or grow for you more than it would in a savings account, right? So you have two different
mhm.
extremes. And I think when you're trying to build wealth, you have to find a balance between those two extremes in order to say, you know what, this money is actually going to grow for me and actually build wealth for me, rather than I might lose it doing something too risky, or I'm not taking enough risk and this money's not working as hard as it could for me. What do you think?
Yeah, so the whole thing when it comes to investing, you have to take some, I want to say, calculated risk in order to make a return on your money.
Yeah.
If not, you should just leave your money under your mattress or put it in a savings account. But if you do that, you're not beating inflation because that money can't grow as much as you need it to keep pace with how much prices are going
And
up.
you're not
Okay.
building wealth.
So and you're not building wealth. So, yes, it's an inherent risk investing your money in anything. There's an inherent risk, but that risk does not have to be more than you need to take. And I think many people think either is I take all this risk or no risk at all. So I agree with you, Nadi, on that. But there's a huge middle ground. There's a lot of people taking advantage of that middle ground where you're accepting some risk, but you are getting a decent return on your money for it. Now, when I say risk tolerance, I want people to be clear. I'm talking about your true risk tolerance, okay? Because you can be a person that says, I'm risky enough. I'm willing to bet $1,000 in case this goes up to 2,000, but I'm okay if it goes down to 500. Now, you might be okay on that moment on that day. But how are you going to be? What is your risk tolerance if you lose your job, if something happens in the future where you need that money right away? That's your true risk tolerance. And I think more people focus on the reward that they can get rather than how they can lose their money. And I would say for me, and I hope for Nadia, it's more important for me to keep my money and make money on top than it is to sacrifice the money I put in that market for it to go down. So I'm willing to accept a little risk, but I'm not going to say my true risk tolerance is that I'm very risky because I'm just not that type of person. But understand risk works both ways. You can make a lot of money, but you can lose all your money. And that's what people really need to understand, especially as a beginner when it comes to risk tolerance.
Now, when I think about risk tolerance, I think like I completely agree what you said, Nicole, but my thing is also that if you're beginning and you're an investor and you're beginning to invest in building for wealth, I think you need to get comfortable with the idea of possibly losing your money. And then when you go in with the idea and say, okay, I'm comfortable with the possibility of losing my money, let's minimize the ways that that will happen. And I think when you operate from that perspective, you have a lot you have a higher likelihood of keeping your money. You have to get comfortable with the fact that there is a possibility that you can lose all of your money, but that should not stop you. It should give you pause to say, you know what, let me do more research. Let me figure out what I'm actually investing in and see if it actually fits in line with the goal that I have and not someone else's goal. And then let's work from that standpoint and build from there.
I agree. And I think this actually brings up a point. Never invest money you can't afford to lose.
Yes, I.
Period. I think if you stick with that, you will be able to dictate how much risk you have and also be okay with losing the money.
Mhm.
So never go into investing thinking that it's a sure bet and also never try to invest money that you can't afford to lose. So with that, I think what Nadi was saying at the beginning with putting money in to invest, that money that you put in investing, no matter the amount, should be money that you're willing to lose.
Yeah, because
Okay.
you don't lose
Now,
money on most people don't lose money on taking the wrong investments. They lose money on selling at the wrong time. So the longer you can
mhm.
stay in the market, you can recover from the losses that had happened to you. But when you sell at the wrong time, that's when you're really realizing your true losses.
Okay, so now that I told you there was three things I think a beginner should do when they're trying to build wealth investing in as a beginner. So the next thing I would say is your timeline, right? How long are you willing to keep this money in the market? Because like Nadia is mentioning, the market can go up and down, up and down.
Mhm.
And if you're not going to stay in there to weather those storms or able to stay in there because you're afraid or you're able to stay in there because you can't afford to lose that
Yep.
money, then you're going to be maybe more prone to selling at the wrong time, okay? So you need to pick investments that match up with your timeline. If you're only able to invest for the next 5 years and you only want to invest for the next 5 years, then you should look at investments for that. If you want to look at investments that are going to help grow over 30 years, then you should look things like that. So you have to take into account your timeline.
Yep.
Now, the third thing will be your goal. What are you investing for? Are you investing to buy a house? Are you investing for your children's education? Are you investing for retirement? Those things you need to ask yourself because all these things, these three things, your risk tolerance, your timeline, and your goals, all affect the investment strategy that you're going to actually use as a beginner or as an investor altogether. So the first thing you need to do is ask yourself those three questions. What are my risk tolerance? What's my timeline? And what's my goal?
Now, and a funny thing that I think about whenever I think about what is your goal is that I think people are easily influenced by other people who have probably been investing for longer than them, or they're saying they tell you that they've been investing. So you're more easily
Mhm.
influenced by what they tell you to invest in, and instead of doing your own research and say, hey, is this a good investment for me based on my risk tolerance and not based on the person's risk tolerance who's telling me what to invest in, right? Because
Yeah, that's like kind of like FOMO and also trying to be in the other person's shoes when you
exactly.
can't
If you're
do that.
if you're a person who is in your 20s and you have a lot more time in the market than someone who's in their 40s or 50s and who's starting to
You have a
invest,
lot less to lose in terms of
you have a lot
outside. You
less
can lose
to
money, but you have time to gain it back.
exactly. And your risk tolerance is going to be a lot higher. So if I'm in my 20s and I suggest an investment to someone who's in their 40s or 50s or 60s, that person has to understand, hey, the person who's giving me this advice, do they live with their parents? Do they have the same responsibilities as I do? Can they afford to lose the money or can I afford to lose that money? You have to look at that from your own point of view. Just because someone gave you a stock tip or some kind of investment idea that they think they would be good for you, you have to take a step back and say, hey, does that actually fit me? Because I think people
Yeah.
are easily influenced that way. And it's like, oh, I could do long term, but there's tons of different investments. And it's for different people at different points in their life. Even if you are the same age, maybe you don't have the same responsibilities. Maybe you
Now,
don't.
I would say on top of that, not just that you might not be the same person, but everyone loves to tell you when to buy,
Yep.
but no one tells you when to sell.
Hmm.
Okay. Everybody wants to get a stock tip to you or so and say, hey, gotta buy this. It's doing great for me. Everything else.
Exactly.
They don't come back and say, hey, you better sell that.
Yeah.
It's
And,
doing
and you
horrible
don't
right
know,
now.
maybe you react differently to losing money than they do. Maybe they're willing to do a lot more to make money than you are. So you
Mhm.
just have to take that into account too. So what's another point, Nicole, that we would give them if they're trying to build wealth as a beginner?
Okay, I would say please understand that this is should be a change in mindset for you,
Okay.
right? Because this is going to take discipline and it's going to take time, no
Oh, you
matter
said
which way
discipline.
you like
Most
it.
people don't like that word, but hey, let's bring it
Oh,
back. If anything you want, you know it's going to be it's going to have some discipline involved in it, and it's going to take consistency and hard work. That's where
yeah.
we're at.
Nadia and I do not believe in get rich quick
Not at
schemes.
all.
Okay. And we definitely do not like it when we hear people are getting scammed because truthfully, it takes a different mindset. Because if you're trying to do something that other people don't normally do and you're trying to change your life, any type of change in your life has to come with a different set of mindset. But it also takes
Yep.
discipline. And I believe the best discipline is doing things on a consistent basis on a long enough time to see a result. Like say you're dining and you try to lose weight very quickly, the quicker the weight is going to come back on.
Yep.
Please take that and transfer it to any area of your life. So if you're trying to make a hit in the stock market very quickly or real estate market, because in terms of investing, I want to say this is more than just stock market
Yeah.
investing.
Exactly.
It's investing in real estate and everything else. But if you say the quicker you can make that type of return, or put down $100 and make 200,000, understand that that's how quick you can lose that money.
Exactly.
I would say to any investor, especially as a beginner, understand it takes a different mindset, and it also takes discipline. And your mindset should be, how do I not only make this money and build wealth, but how do I keep that money? And the way to keep it is to be disciplined and think of it as a long term game plan.
Now, I think you hit upon something when you said avoiding scams. I think a lot of beginner investors
Oh, God.
are very susceptible to when this happens because you're so eager to make a lot of money investing, right? And people use that and they prey upon it. So I guess one way you can avoid that is saying, look, if someone ever promises you a guaranteed rate of return, run the other way because nobody can guarantee you
Mhm.
anything, especially if it's a
Yeah.
high rate of return. It should already start raising red flags for you in the beginning, right? So if you really want to build wealth, teach yourself or be conscious of people who may be praying against you to try to make money off of you or giving you something that sounds too good to be true. Because you're never going to build wealth if people keep fleecing you or stealing your money because you're trying to go after the quick wins and you're missing out on what really is the real process when it comes to building wealth. Building wealth is a long term game. Getting rich can happen fast, but you can also lose the money fast. So if you're trying to build wealth, the definition, it takes a longer time. That's what
Yeah.
I'm saying.
You can't guarantee the same thing for everybody. Because the only thing, if you're looking at courses and stuff, and I'll let you guys know, Nadi and I offer courses, we offer memberships, but you will never get a guaranteed return from Nadi and I, right? The only thing Nadi and I will guarantee is that we're going to try our best to teach you what we know in order for you to be on your financial journey. That's the only thing we can guarantee. But you'll never hear us make a crazy claim or anything like that because we don't believe in that. And that's not how we try to live our lives. Okay. So I don't want to down anybody else. If they can make those claims and they can actually prove upon those claims, great for them. But for us, in our experience, we can say that not everybody can have the same result because not everybody is the same. And just the inherent risk when it comes to investing, Nadi and I would never make those claims.
Yeah, we
Okay.
can guarantee that you will learn from us and we will do our best to make good on that promise. Now, you said earlier how when this is not just investing in the stock market, it's investing in other markets too. And that was another one of my points. If you're looking to build wealth, you need to diversify where you actually invest your money, right? That could be diversification within the stock market, but it also could be diversifications within other markets. So when I say other markets, I think about the real estate market. I think about maybe businesses. I think about the stock market. There's different things that you can invest in order to build wealth and not just the stock market. But you have to use your money in a way that it is diversified. So if something does go down, your money is still going up or at least protected in other markets. That's what I mean by diversified. You don't put all your eggs in one basket. You spread it out and hopefully you're making return in either market that you choose and you're doing it in a way that the risks are calculated.
I think one thing that we need to actually bring back into this whole discussion that is not in this discussion right now
Okay.
is the link between savings and investing
Okay.
and how important it is to save before you invest, or how saving can actually help your investing. So, one, we did mention you need to only put money that you can lose into investments,
And
right?
how do you
But the
get
only
that
way to have
money?
money you
How do
can
you get
lose,
the money that you can lose? Because I
exactly.
know people say, I have no money I can lose. Well, you can give yourself a bigger buffer by doing what, Nicole?
Exactly. You have to save and you have to budget. Now, on top of that, if you want to diversify, and we do, Nadi and I have investments in real estate, we have investments in the stock market, we have investments in business. This is what we do. We diversify because we don't know if the stock market is going to go down and real estate is going to go up, or vice versa, or both go up at the same time. That's great. But it's better for us to have different buckets that can all produce wealth.
Mm-hmm.
Okay. So, but in order to do that, the first thing Nadi and I did was focus on savings, right? Because then that allowed us to use that money to deploy it in different areas. And it definitely helped us in the past, and we believe it's going to help us in the future. So, the first thing you have to understand as investing as beginners, you have to take the first step backwards is get your savings up so that you can use that money and maximize that money so they can act like little soldiers who are going to go to work for you in the different investment vehicles.
You
Okay.
know what popped into my head when you said it? What Daddy used to say: "Scared money don't make no money." But the way you, the way you don't have scared money is that you are able to save money and put the money that you invest and leave it in there and let it work for you a longest period possible. You don't want to have to pull it out at the slightest volatility of the market. Now, I'm not saying take risks with that money, like crazy risks, but if you really want to make money, you can't be scared to lose that money. And the way you do it is by saving money and leaving that money in there that's opposite from your savings and have that dedicated just to investing.
Yeah. So I want to make it clear though, Nadi and I have different risk tolerance. So look at us, we're twins and we have a different level of risk
Exactly.
tolerance. Okay.
Nicole's a scaredy cat most
So,
of the time, but
but both work for us. But again, Nadia is not as risky as she thinks she
I'm
is.
not
She is
risky at
not a
all. I'm
risky
really
person.
not risky at all.
So I want that to be clear as well. When we're talking about risk, we're talking about calculated
Yeah.
risk, okay, versus no risk at all. Now, Nadia, what is another thing that you would say that how would a beginner begin investing to build wealth?
I would say they should understand exactly what they're investing in. Too little research is done on the things that people want to invest in, and they just want to say, "Oh, I just put it in here. I completely forget about it. It just sounded good, right?" Do your research. Make sure it's something that actually you want to stay in for the long term. Don't just buy something and say, "Oh, well, it sounded like a good idea. I saw it on YouTube or I saw this, and I'm just going to put my money in there." One of the biggest problems as a beginner is that you're not doing enough research to really understand what you're investing in. If you don't understand what you're investing in, why are you putting your money in there? You don't understand if you don't understand that market or you don't understand what you're buying, how do you know when it's a good time to sell or how do you know when it's a good time to buy more of it? So my thing is if you really want to build wealth, start learning how to research the things that you want to invest in so you make yourself as educated as possible as an investor so that you understand exactly the ins and outs and when you should be getting in and out.
Okay, so with that, I the way I hear it is one, this is going to be your money and no one's going to take
No
care of
one
it more
cares
than
about
you.
your money than
So,
you should. My thing is nobody's
exactly.
going to care more about your money than you should. So you should know everything where your money is going. And even if you
Okay, so
have that
when people
money,
say do your
well,
research, right?
even
What
if
does it
you
mean?
okay, let's take a step back. Even if you don't want to dive into the research, at least research about the person who's going to be managing your money too, and research what you can about them and see how much they're charging you, what they're actually investing in, and see if it's actually right for you or just something they're just giving to everybody and it's not going to be the
Mhm.
best decision for you.
Yeah, okay. So this is where I was going with that. One, when it comes to doing your research and understand that no one's going to care about your money more than you do, is because at the end of the day, you are
Yeah.
accountable. Now, if you decide to transfer the responsibility of your money to a financial advisor or so like that, please understand that at the end of the day, you will be the one with the results.
Mm-hmm.
Okay.
You would
Not
all you're going
them.
to do is get a sorry, or that's
Okay.
it's just
So with that,
happens.
because you're accountable, right? Doing your research to me is read the books, take the courses, okay? Watch the videos, do what you need to do to
Mm-hmm.
get comfortable enough to understand that you can do this. Now, if you need to be comfortable and start off small, I'm fine with that. In terms of money or in terms of amount, I'm fine with that. In terms of amount of investments you have. But you have to be accountable. And this is for anybody. I don't care if you're a beginner or not. At the end of the day, it's up to you to be accountable. And if you're good enough to earn the money that you're going to invest and smart enough to earn the money that you can invest, I guarantee do not sell yourself short. You are smart enough to learn how to invest it as well. So, I would say another thing in terms of how to build wealth investing as a beginner is to get into your retirement accounts. If you're not into them, get into them today because that is a way to build wealth in the long term and they do offer some tax advantages. And it's a way that the government has put together and your company has put together to help you save for the future.
Yeah.
And building wealth is not something you use for today, it's something that is helping you for the future. So I think that's a quick thing to do that anybody can do is get right into your retirement
Well,
accounts.
just to piggyback off of that idea, I think also on top of you getting into your retirement accounts, understand who you need to speak to who are handling your retirement accounts. A lot of we spoke to a lot of people. They don't even know what number they should call to find out what they're investing in, if they want to change an investment. Get used to using the customer service of the people who are managing your accounts, of the people who are holding your investments. They are there for a reason. These people are hired to speak to you and answer your questions. Use them. Be comfortable asking questions, because if you're not comfortable now, I doubt you're going to be comfortable later on. And you don't want to sit there and watch the market change on you and not know what's going on or who to call. You don't want to call these people when you're panicking. You want to be aware of what's going on, the whole process, and understand, okay, I can speak to this person about this. I can change this investment here. Use the tools, speak to people. I think more people, because this is in your hands now, you have to take more control. And part of that taking control is understanding where you need to go for information about your retirement accounts.
Yeah, I think that's good. I mean, I would say the last thing I would say is if you want to build wealth investing, start today, because we started this video saying that most people start towards their 30s.
After
15% or
30s,
so
after
started
30s.
after 30. And then you're saying that 15% of people start in 2020 or later,
Yeah,
right?
15% of people started investing in 2020. So that means it's wide open now. It's as easy as possible to start investing now than it's ever been.
Not just that, is that you need to get in it. You need to stop being on the
Yep.
sidelines. That's the whole thing in a nutshell. You have to do what you need to do to feel comfortable enough to do your research behind, so that you don't get caught with any scams, that you know where your money is going, that you save enough money to start putting that money away that you can afford to lose, accept some type of risk, and be accountable for it.
Yep.
So with that, you can only do that once you start doing it. So if you're looking at this video, you already started the process, because I don't think anybody would be watching a show about how to build wealth investing for beginners if they weren't on that road. So I congratulate you for starting that
That is
journey.
true.
And I really, yeah, and I want you to understand that we are out here to help you. If you want, look at all the videos we have and just keep going. Put some comments at the this video. And also for you guys, I do have a free gift that I want to give you too, because if you're at the beginning of your journey, I think one of the things can help you, and one of the things that's a barrier is the terminology that's used in
I
investing,
agree.
right? So with that, if you look in the description, I'm going to leave a 25 must know investing terms. It's completely free. You just click on the link and just download it. And that should help you get a little bit further on your journey. After that, continue to watch us and, like this video and share it with others. Do you have anything else you want to say?
All right. And I say, you guys, don't forget to subscribe to the channel. We do this for you guys. And the bigger we grow, the more people can see these videos and the more help we can give to people who are new to investing. So if you like the channel, subscribe. You like what we're doing, make sure you leave comments. And we'll look forward to seeing you guys in the next video.